Hi guys. Hey, we're back for the very last chapter of the very last section in the semester. It's section 10.2. There we go. I was there a minute ago. So in chapter 10, we learned how to basically use accounts to post cash payments, accounts payable, and that type of thing. So the other thing this chapter does is it does a lot of reviewing of journal and ledger entries, which really is the heart of accounting. So I'm just going to go through these and give you a chance to think about what the debits and credits might be, and then we'll talk about them a little bit. So on April 2nd, we issued check number 1, which is new, but it just basically means for to Pete Blum for insurance paid in advance. So basically, it would be nice to have a chart of accounts, but you should kind of have a feel for this. So basically what we did is we paid our prepaid rent. So our debit would be prepaid rent and our credit would be cash. So hopefully you got that one. This one, whenever it's issued check number, that means you're paying someone. Joe Francis Company in payment of its April 4th invoice number 388. So Joe Francis billed our company April 4th, invoice number 388. And so now you're paying it. So when you're paying down a liability, that would be a debit to accounts payable and a credit to cash. Okay, I think you know that. It's just worded a little bit differently. And then this one says issued check number 3. So whenever you're issuing a check, your cash is decreasing. So you kind of already know that that is going to be your credit. For merchandise purchased for cash. So in this case, it would be merchandise inventory would be debited because you bought more inventory and your cash would be credited. And then on April 14th, issued check number 4 to Thorpe in payment of its April 6th invoice, less the return and a 1% discount. So the first thing you're going to do is remember that your debit is going to be to decrease the accounts payable, and then you have to the 1% discount, you would have to go back and see how much you actually purchased and then what you returned, of course, to figure out how much you owe, and then you have to take the 1% off that. And so the 1% goes in the account called inventory. It's a little tricky. And then that would be credit. And then your other credit would be cash. Okay, so decreasing accounts payable is a debit. Your cash is credited and the discount has to be credited also. It's just a challenge to remember which account to use. And last but not least, issued check number 5, $700 for salaries paid. Okay, so that one's easy. That would be wage and salary expense would be your debit, and then cash would be your credit. So hopefully those would be things that you could figure out. Like I said, when you do this on a test, they will have a chart of accounts for you. Okay, so here is the April 14th transaction. This is where you had a returned item and you're taking the 1% discount because you're paying in the amount of whatever the terms are. So in this case, your accounts payable, oops, I better move me. Your accounts payable is going to be debited for the whole amount, less the return. Your inventory is credited $6 and your cash is credited the remainder. So this is the 1% discount. 1% off of 600 is going to be $6. So that's a little tricky. You might have to refer back to that or look in your book when you do your homework. Okay. So these are just what we just went over. So first one is prepaid insurance, debit, and then cash is credited. And then this one, basically we're paying off our accounts payable. So that's a debit. So decreasing accounts payable is debit. And your cash is credited. And remember, we do the little check because it's going under the Joe Francis account. And that is a subsidiary accounts payable ledger. So that's what the little check is for. This one, we bought more inventory for our store and we pay cash for it. And then this one, again, we are paying off our accounts payable for Thorpe. That's going to go under our subsidiary ledger for accounts payable, and that's why we do the little check. So the main account is just accounts payable, the controlling account, and then the subsidiary ledger also has to have it entered. And then our inventory is taking the discount in this case, and cash is going to be what I actually send off to pay for my bill that I owe this Thorpe company. Okay, and then the last one, you paid your employees, salaries, expense, and cash. So that's pretty easy, and a lot of it is review, which is perfect because you have your final coming up. Okay, so here you have very similar to doing subsidiary accounts receivable. Now you have subsidiary accounts payable. So these are all your vendors or people that you buy from. And when you buy something, of course, when you take on liability, it's a credit. So we can see how much we owe our vendors. So Abby Blake, we owe $5,650. And then Joe Francis, we don't owe him anything. We paid it off. And we just did that in the last transaction. And then Joe Sullivan, we had 2 transactions with him. We owe him $1,480. And in this Thorpe company, we had a couple transactions, one of which I think was a returned merchandise. So that's where that accounts payable came in, and that's why we want to keep it the 600 and make sure that you have the amount that was the accounts payable. Don't use the discount amount. So that's our subsidiary accounts payable ledger. And then if we go over here to our controlling accounts payable, all the entries from here are also here. So every single credit is entered, every single debit. So the balance is the total accounts payable, which is going to show up on which financial document? You should know this. It's going to show up on your balance sheet. Liabilities are on the balance sheet. So if we added what we owe here in our subsidiary ledger, it should total what we owe in the controlling ledger. Okay, so that's pretty easy. I don't think it's really anything new. It's just, you know, one more thing to learn. Okay, so basically the schedule of accounts payable is proof that the sum of the accounts payable subsidiary ledger is equal to the controlling account. We just said that. Let me show you. So here's your balance in your accounts payable. These are what we paid off. This is what we owe. So we owe, remember, always have a credit balance in accounts payable. And then if we were to add up all the subsidiary ledger, that would equal 7,130 also. Only creditors owed a balance appear in the accounts payable schedule. So the one guy had a 0 balance. He would not appear in the accounts payable schedule. And I don't know what, if it doesn't balance, I guess, then you have to make sure you go back and figure out where you made a mistake. But you're not going to make any mistakes. You're going to get it right. So this is the schedule of accounts payable. Remember, they're always in alphabetical order. And if you remember, there's only 2 people in this case because there were only 2 people owed. And that is the total of accounts payable. So that is something that every business does weekly or every 2 weeks. And because you need to, a lot of times you have to discuss who you owe money to and, you know, were there a lot of returns? Are you taking the discounts? All of those things have to do with accounts payable. Just like the schedule of accounts receivable is money that's owed to you. So those are big parts of running a business. Okay, so in summary, I'll just go over these real quick because it's a pretty short PowerPoint. Free on board shipping point means the purchaser of the goods is responsible for covering all the shipping costs. And that would mean that until they reach their destination, anything that's damaged, it is the responsibility of the purchaser. If the terms are FOB destination, the seller would be responsible for covering the shipping costs until the good reach the purchaser's destination. So shipping point is you, the small business owner, pay to have the goods shipped to you. If something breaks, the minute they leave the warehouse, it's your problem. FOB destination is a better deal for you because then the seller has responsibility. So, and remember, this oftentimes is negotiable in terms of making a decision on whether you're going to purchase or not. So as you guys probably are aware of, when you buy something online or something, a lot of times the shipping is part of a sale or a good deal. You get shipping for $1 or no free shipping or something like that. Okay. So basically here's the steps for buying merchandise. You prepare a purchase order or purchase requisition. And then the purchasing department prepares a purchase order. The seller receives the order and prepares a sales invoice. Remember, a sales invoice is like a bill. And then the buyer receives the goods and prepares a receiving report, make sure that the goods are all there and they're all in good shape. And the accounting department verifies it, approves the invoice for payment, and then the accounting department pays it. So, summary of the chapter: the accounts payable subsidiary ledger is organized in alphabetical order. It's not the same book as the accounts payable, which is the accounts payable is the controlling account in the general ledger. So, subsidiary ledger has all the people that you owe money to. At the end of the month, sometimes the end of the week, the total of all creditors' ending balances in the accounts payable subsidiary ledger should equal the ending balance in the accounts payable. The controlling account for the general ledger, and let's go up here. A debit memorandum issued by the buyer indicates that the amount owed from a previous purchase is being reduced because some goods were defective or not up to a specific standard and thus were returned or an allowance requested. Allowance would be like if you wanted a discount. So remember, it's a debit memorandum because you are debiting the accounts payable. A credit memorandum is for accounts receivable. So a credit memorandum decreases the amount of the accounts receivable. That was in chapter 9. Debit memorandum reduces the accounts payable. Okay, one more. On receiving the debit memorandum, the seller will issue a credit memorandum. So complicated. All payments of cash or check are recorded in the general journal. At the end of the month, the schedule of accounts payable, a list of ending amounts owed individual creditors should equal the ending balance in the accounts payable, the controlling account in the general ledger. Didn't I just read that? Anyway, that's all of chapter 10.2. So hopefully you're following along pretty good. I'm going to prepare a final exam review for you, and that'll help you, and we can Zoom anytime you want. So I'm here right now, and I can help you with your homework. So evenings are always good. Alrighty, take care, and I'll be sending an announcement out here pretty quick.